All right, welcome everybody to another Bookmap Academy meeting, and we're going to be going through live coaching and mentoring. The agenda, introduction here, and the goals, any kind of news and updates. We just have one thing to go over, and then it's on to your content. Members of the Academy or pilot program, and they've marked up their charts. They put it into a spreadsheet, and then us coaches will go through it and give you guys feedback on your marked up charts in your journaling. So let's see. To start off with here, a bit of news. This has been ongoing. It's going to end pretty soon. You can see until May 3rd here. So if you haven't entered, you have last chance here. Take a photo of your Bookmap desk and your setup with Bookmap on it, just like this guy here. And then upload it to X, LinkedIn, or Instagram with hashtag BookmapDesk, and you're entered just like that. $1,000 for first place, plus 1 year of Global Plus and one exchange of data. So CME, for example. There's a runner-up of $500 for the second place, and then 1 year of Bookmap Global Plus. So some really nice prizes here. Pretty juicy. So send up your no AI submissions. We'll know the difference. So we've seen a few already. Anyway, let's move on. Our journaling process in here in the Academy. We always cover this slide, which I need to update and make it a little bit nicer. But the four elements are here: impetus, what's moving the market, what are the fundamentals behind the big moves. Understand that, and then understand your key levels on your higher time frames where these big moves go to. And we want to be at levels where most traders are reacting. And this is usually on the higher time frame. You've got the lower time frame and higher time frame traders reacting, and that's where we start to develop scenarios and strategies looking for something. And then time of day, other factors we put into the equation here. And then it all boils down to your setup. You select the proper setup for the day. You have your checklist. You grade your setup, and you determine the risks that you want to put on. And you just wait for the order flow to execute and manage your trades. And that's where Bookmap comes in. And that's what we're going through mostly here is number 4 in the Bookmap Academy meeting. All right. So now the pilot program here is also part of the Academy, but it is a subsector of it. And it is about taking one step back and talking about building a trading edge. The reason being is that this arose because so many traders that I talk to is like, yeah, okay, yeah, I'm going to trade this. I'm going to trade that setup. I'm going to, look at this. And it's like, well, hold on. You need to kind of not only understand what the elements are, do you have an edge with it? And a few studied it to that degree. They didn't know how to define or build an edge, and that's what we're here for in this program, is give you a structured process so that you can build an edge for yourself. It's measurable, it's testable, and you'll have data behind it, and it's a very fast method, fun method, I think, because you actually are trading and seeing the price action and getting experience that way. Anyway, let's go through the disclosures and and jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, well, with that said, let's take a look here. Welcome everybody, and we can jump into some of the people that we wanted to cover from last time, and it's good to see him in here. All right, so let's invite DNT up to the stage as a coach and looking for trading his life when he comes in here. And all right, we've got a nice little lineup here.
Yeah. Is John
let's.
going to join the stage this week? Sorry,
No,
just
John's just attending.
perfect.
Yeah, he
Checking
has
on me right now.
marked up charts though that we'll go over.
Okay.
Some good stuff there. And let's see, David. Here we go. We'll start with you.
Cool.
And
I got Vinfra.
You got Vinfra. So
Yeah,
let's do it and jump in here. And
he's in the room as well, which is good.
yes, we'll invite him up to the stage. And
Fantastic. His chat's getting better and better, Bruce. They really are.
oh
As
yeah,
is
yeah, he's
John.
been listening
Really good.
and applying. So anyway, take it
Yeah.
away, David.
Yeah, well, good morning, evening, afternoon, the usual line from David. Hopefully you've all had a good week. John says he can join. That's fantastic.
Okay.
Vinfra, yeah, love the charts. I may have apologies if I've missed the checklist. You've got the letters and everything else on there. Really good improvement here, Bruce. Vinfra, as he will take the mic shortly, he's talking about Confluence. He's looking at Nasdaq, so he's comparing the two instruments, which is fantastic. As many of us will know, there are traders, and I'll lean back into Will Shire, that will chart all four, Bruce. They'll have the Russell up, they'll have the YM, the Dow up, as well as the Nasdaq and the S. I have tried that myself when I used to have loads of screens, and it can be quite helpful. Although there's not necessarily a rule, Bruce, as you'll know, between which is going to lead, which is going to lag, and some days they just don't seem to make sense at all across each other. But there's certainly something, if you haven't tried it already and you've got the real estate, have a look at doing that, and if you can pull the tabs out from Bookmap, even better. So that's fantastic. The trade here, brilliant. Absolutely, it's my usual line, Bruce, of we're doing something to we're not. So here we're selling to we're not, and then we start to buy, and there's a very clear transition. I'm making sure I say the right words this week, Bruce. We've got the structure, we've got lines coming down. As I was talking about over the previous weeks, Renfrew, it would be quite good to start then drawing those lines or those channels when it starts early doors, when it starts to sort of turn around from your garnet. Lovely key levels on the chart as well, Bruce, in terms of overnight highs and all that, which is fantastic to be running that. I can't see on the chart, Renfrew, VWAP or POC. Apologies if it is on there and it's just mixed in the in the colors on that. Great entry, as we'll see on the next chart, Bruce. That's the sort of high level chart. Great entry on there. He's picked his take profit target just ahead of the 80, so he's front run that tick. Lots of ticks on that. This is quite a nice move. This is a quite nice move. So if there's a homework for this from Vinfra, would be my line of looking to scale. So when you do these replays again, if people are allowed to, Bruce, where you've got a nice single in, the volume is with you, it's moving at pace, then is the time to maybe throw another one on once you're into that market money. Anyway, I've rambled a lot here, Bruce. I'm sorry.
No, not at all. In fact, David, so just I need to jump in for just a second.
Good.
Pilot program members, and this is a replay file from back in October
This is 25,
2025.
Yeah.
So they're instructed to take everything off of their charts so that they focus on the four elements in the setup. And then the other thing too is like not to scale. One in, one out.
You know your program, David.
So just because like it's for focusing reasons only.
Got it. Yeah.
So anyway,
no, that's perfect, and that's if I try and dig myself out of the big hole here. As you all know, I do run POC or VPOC and VWAPs, but I don't live and die by them. I'm not a POC trader or a VWAP trader, but at the same breath, I do keep an eye on them. Anyway, let me shut up.
You're good. The VPOC and VWAP, it doesn't really work in the replays anyways. So whenever you see a replay,
Okay.
the VWAP is going to be wrong because the replays are normally started after our TH open or some random time.
Okay.
So
So
the
they
VWAP is going to be random VWAP. The VPOC is going to be a random VPOC.
Anything.
Yeah,
Okay.
it's going to be all
That
random on
makes
these
sense.
replay files.
So
Vinfra,
let's let Vinfra kind of jump in here and explain so we can react to his response. Yep, Vinfra, you're muted or something at the moment.
some good work here though.
Yeah, very good. Very good chart. And you see these all day long, these setups, day in, day out, both ways, going long, going short.
Vinfra, are you there? Do you want to try rejoining? I don't know. By holding the space bar? I don't know. That's the push to talk.
This is a good chart, Bruce, because I can't talk about the angle on this one. The angle coming down is probably a bit steeper than it's going back up.
Yeah, for sure.
But still, it comes back up. It's bullish. It's coming back up.
Okay.
Me and Laura were talking. Go ahead.
Vinfra, if maybe I don't know, try to rejoin, leave and rejoin, or hit Control R, and that'll refresh it for you. And then it's weird. No, we've had you here several times, so
We have, yeah.
oh, pity. Okay. Yeah, you're the speaker, but we just don't hear anything. Anyway, let's we'll jump over to DNT. Maybe it starts to work for you with you toggle a few things. So DNT, you I kind of cut you off there. If you want to jump in and you had something you wanted to say.
Yeah, Vinfra, if it works, just cut me off. Or cut us off. Don't let us babble on. No, Laura and I were actually talking about the accumulation. Like this is a clean transition from the sellers to the buyers. Like it's pretty clean. Get a nice impulse up and a continuation that just lifts it out of there. And they're lifting the bid, obviously, or the offer, and then you could just see it going right. It's pretty clean transition. Sometimes you don't see these clean transitions, or a lot of times we don't see these clean transitions, and the market regime changes, giving us a little bit less of these clean transitions sometimes. I don't know if you guys have noticed that as well. Sometimes the transitions are cleaner than others, especially when the regime changes.
It is clean, and you've got that lower blood coming in as well at 67.5. If I come in with my current thoughts on this cleanliness of trading, I'm finding, and this is heresy, John will tell me off, that post London close, I'm finding the market behaving better on these sort of setups.
Yeah,
now, maybe that's just
me too,
David.
Yes.
But once the Europeans have gone off,
Yeah.
they've left the stage. It's a little bit better, but I don't know. Maybe it's just psychological. But no,
Recently,
you two seem to think so.
No, for a while now. John, so jump in, please.
Yes, sir. I like the stop management, especially because once the market hits 12 noon, I mean, it's an hour plus before he gets to his target. So after that initial push up, he brings his stop up to where he's got a break even trade. He's at a no risk proposition, and he can either break even, make a couple of ticks, cover his costs, or he's going to take it up to liquidity. So I think, I concur with everything David said. And in addition, I think this is a wonderful expression of stop management.
Yeah, great point,
Bruce?
Sean.
Yeah, I was going to say the same thing.
I knew you were. So I jumped in.
Like-minded.
I've been kind of, I'll actually, you know what, I'm going to defer to Trading is Life on this one, because I do have something to talk about the stocks, but I bet you he'll cover it. So Trading is Life, jump in, please.
Yes. Good afternoon, everyone.
Good afternoon.
Hey.
Hey, Vintra. First off, I just want to commend you. I totally agree with John. The trade management was like really superb. Look where your stop loss is right after the break. So if the trade went against you, it wasn't going against you by that much, and you trailed your stop perfectly. Because that's what I look at first to see where you guys place your stops, and from where you started to now, you're managing the trade excellent. Um, your trend line break, you was patient. You saw the exhaustion. Once you waited for it to break, then you got in. I think you executed this trade perfectly. Um, it was a great trade. I hope I covered what you were expecting me to cover, Bruce. But right back at you, right back to
Okay,
you.
okay. Yeah, fair enough,
You
fair
hear me?
enough. Vinfra, are you audible at this point? No? Oh, too bad. Really too bad.
Yeah.
Anyway, um,
Do you
yeah,
hear me?
yes, there you are.
Okay. Wait a moment.
Excellent news.
Yes. Do you hear me?
Yeah,
Yep.
please go ahead.
Good. Good. I changed my setup. Sorry. Good. It's good.
Okay. I don't know if you've heard
Great.
everything. Are you able to, do you
Yeah.
have any comments or anything you want to add?
I have everything, and I'm quite agree with all you say as always. And I try to apply what you say every week, even with the others, because it's profitable for everybody to have some charts like this, and I don't know any other company that does this kind of thing. So it's really great to be able to speak about our trade and to um, see what the others do and understand more things. I think you can. I hope you can see a change in my job, in my work. I changed the perspective. I post in 1 day or 2 days ago another trade. I post the failed trade and why I think I missed this trade and well it's I think I do my best to be better. And yes, when I come back to this chart, I know that some people are going to enter in the first orange arrow, but I prefer to see the structure to form and then break this structure, and it's a better entry in my EMIA is better. Everything is better in fact. So yeah, I'm quite happy with I do now, and I try always to be better and to do the things better. So I hope uh, I'm not speaking about the points of the setups. We have the key levels, we have the passive accumulation in one. We have the break of the structure to structure the break of the trend line. We have two trend line, the micro trend line and the main trend line. And then I wait the break of the main trend line to see a structure that forms. And when the structure is broken, and if I have, of course, the volume and the participants to enter, if in this moment when the second orange arrow points to my entry and the break of this structure, if I don't have enough volume and buyers there, it's completely silly to enter.
Yeah, Yeah.
Yeah.
Fantastic. I really I commend you as well. You've been listening. The difference here between other weeks is amazing. You know, you've zoomed out. You're getting a bigger picture perspective of what this is. You're trying different entries. You're trailing your stop. You're paying attention to all the details. Or their main issues, actually. They're not details, but like you're applying yourself, and it's really great to see, because this is an entry over here. But you know, and you identify that, but then you identify, I decided to get in here because I have the extra confirmation here with the volume, with the
Yes,
aggressors.
because where you point the first entry, I have to maybe I'll be stopped with the last sellers there. Yes, there what you are when you where you had your arrow just before.
Hmm.
Because I have to be below the pockets of aggressive participants. So maybe if I try to have the stop, the tie stop, was maybe with the last sellers that try to put these things down, maybe I'll be stopped. So when the structure is clear and it's formed, and when I have this aggressive participants to break the second structure, okay, we can go.
Yep. Yep. No, great stuff.
Great.
The On the stop trailing, I think it's in retrospect here, like, okay, so over here, you know, this is our process, right? Like, you're moving this up, when it breaks a structure like here, then
Yeah.
you can move it up, but you move it one structure below. So supposedly it's supposed to create a new structure here, you know, like around in this area here, which it kind of did. It kind of dipped down a little bit lower. Actually, you could probably move the stop up a little bit higher here, but then it broke this structure, breaks out. Okay, this is the new structure in here. This is perfect. I mean, you know, you're trailing behind it, a structure behind, and that look, you would have been, if you trailed it to the new structure here, you would have been stopped out here. No question. Probably here, probably here. Instead, you gave it some breathing room, let the trade work. And you're going
Yes.
with the movement here to the upside, albeit slow, but you know, you're looking forward to trade up into that liquidity. Great job.
And
Thank
unusually,
you.
Bruce, if I chip in, this is through London close, and it's quite sanguine. There's not really much activity through that 11:30, which you do get some days, and other days you get quite brutal. But
Yeah. Okay. Guys, any other follow-up questions or
Yeah,
comments?
Vintra, this is how I want you to trade. Just trail your stop for every post. This is textbook. The way your entry, your stop loss, the way you trailed it. This is how I want to see every post you do, and this just goes back to the confirming you coming to your posting, and you're coming to these academy meetings every Thursday, and you putting the effort, and your work is just showing it. This is just a phenomenal job. You putting the effort, and the result is showing. So thank you for that.
No, yes, thanks. No matter, but thank you to you all to give us the chance to do this, because it's the best way to learn something and to have some progress and to be better. So like Bruce repeat every intervention, we find our edge. We have setups. We can know perfectly the setups, but if we don't if we don't have all the elements, never we will be a good trader. And you give the opportunity to everybody to be a good trader or a better trader, and that's it. The only thing that I will I want to say about the bigger picture. I yes, I've learned this from other participants like Nan, like Thibaut Vaux. Uh, these people. That's why it's important for the others to see my charts, my trades, or the other trades, because we are learning from everybody, and that's a great points, and something that we don't have elsewhere. Now, for about the bigger picture, it's like you know I can use a long view to watch something, but I don't have what happens to near listings that I'm watching. So it's a problem because I can be surprised by anything. So we have to have a larger, a bigger perspective, and then go in the details to confirm, for example, the aggressive participants or something like that. But we have to, and then the target. How can we have target if we have at 30 seconds? You know, so it's important to have all the elements, and to have all the elements. We have to begin with the bigger picture, and then go inside, more inside, more inside, more inside, to come back um, in a bigger picture. You can see with the last trades that I post. Sometimes I change my target. In reality, I have two targets, but as I work with one contract, I cannot put to take profits. So it's impossible because I have only one contract. But
That's
when I see the market give me more information and new information, I try to move with the market. So sometimes I change my take profit, and I try my stop, so that I cannot be wrong, or and I can be stopped. If I stop, I'm stopped in profit.
yeah, yeah, and it's good training. This is like one of the key tenets in the pilot program, which you are using, is just one contract, and then look how much you learn from trailing your stop, and about structure, and about trade management. So keep working along with trading is life on that. Good stuff. Thank you, Vinfrin. Um,
Thank you.
all right,
Yeah, well
guys.
done. Well done.
Let's see, David, you've got, let's see, who else do you have here?
Hey, can
I've
I
Well
got
said.
just do one
Daniel,
more thing?
who's not in. I didn't see him in the room. Can I throw you to the chat, Bruce, just to bring up, my usual one? This is, it's not quite, well, it's in the theme that we've just talked about. I'm keener these days to sort of show something from today's market very, very quickly. So this is ES London time. The London close, I've just scribbled down as LC, Bruce. But look at these, whether you'll rightly describe them as low volume pullbacks. But look at, there's some fantastic entry opportunities. Oh,
Hold on a
when that
minute.
comes.
Sorry.
Okay, it's okay.
Okay, there we go.
So it was choppy as everything before London closed. Those that were trading today, we had a big dip down, then suddenly, off it goes. But great opportunities to get in there, Bruce. You got some fair good ice, low volume pullback, those higher lows, higher highs, and then when Trump starts tweeting, then it goes crazy after that. But, examples here of what we're talking about is basically what David's saying, Bruce.
No, good stuff, David. So I mean, the same thing is repeating again and again in here.
This is it. Yeah.
Yeah.
This is exactly it. And if you were waiting for those type of trades to come in that are lower risk, and you've got an opportunity to get in, and yeah, a decent finish to the day for sure.
Nice. All right. Let's see.
Hey, can we go back to Vinfra for just a second? I just want
Sure.
to mention one thing, please.
Uh-huh.
We're always looking for the best trades, the A trades.
Yeah.
And to me, this is not an A trade. I mean, I implore his selection of his stop management, and all the conditions are met for the trade, but one thing is missing. At the time of the entry, I can't map a target. I don't have a target that I could assign up there. Now, that liquidity is showing at the end. They're at 67.98. If that were showing at the time of the entry, that liquidity up there on the right, Bruce, at 67.98, up a little bit.
Oh, up here.
Right there. If that were showing at the time of the entry, then that would make that an A trade. So right now, to me, it's a B trade. And really, I applaud him for hanging on, but I would have trouble doing that because I didn't have that target above to shoot for. Does that make sense?
It does. And if you flick back to the chart you had of me a minute ago, if you saw that, John.
Yeah, we'll see contrast of that because I'm sure we're going to see a chart later where the target is clear at the.
You can see you got the target very clear above,
Yeah,
and it went through that.
There you go.
Yeah,
right there.
thank you. Yeah.
And that's missing from that's right.
Great point.
Just a point on that, and very fair. In fact, I would say this is like I mixed it up, creating some of these files on purpose so that people still get an understanding. Even the aggressive volume in here on the buy side is not the greatest.
No.
So it's climbing, it's doing it. But look at all the aggressive accumulation that he saw in here though too, right? Which I can't even really see because it's he marked it up so much. But that counts though, so once you get back up above that area, it works. Anyway, the transition, it's still, I mean, it's buy side, I guess, but boy, it's kind of barely buy side is kind of what it looks like. Anyway, that's why I really like his two entries in here that he marked up here, one here or here, potentially. So anyway, it was, like I said, I'm not trying to be defensive, but it's by design to kind of mix these up a little bit so people get a different feel for the different setups and variations of the setups. In fact, T. James got back to me just recently, and we've had a previous conversation about maybe offering failed files so that you can see like, oh, I'm going to get in here and like, oops, didn't work.
Oops.
Why? And I don't know if we're going to do that, but I got some workarounds, I think. Anyway, John, anything else?
No, that's it. I just wanted to make sure I got that in. Thank you.
Okay.
I got something to add.
Yeah.
Just the bars may be a little bit spaced out. It seems okay. I don't know if you like that, Vinfra, or if you turn down if you go to configuration and the volume bars, and you turn down the smart setting a bit, you'll see more bars down there instead of being so spaced. And I mean that's personal preference, but it might help you could probably see the transition from the sellers to the buyers a little bit more clear than you can here, maybe.
Yeah. Good point. To kind of dial in those settings, because it is pretty thin here. Okay. All right. So let's move on. And that was David's. Let's see who else is in here and what coaches covered what. Minute. Okay. I think I'm going to move over to John, and he's got and we'll come right back, David. But we got some other traders in here that are kind of new, and we wanted to cover last time. I promised we'd get to them. So we'll double back David in just a second here. But let's see. We'll go to John and Jimmy. Why don't we invite Jimmy up? And he's in the pilot program. He's got his replay file here, and we'll kick it off with his first entry on the stage here. So Jimmy, welcome, and maybe walk us through your trade markup here and your decision making. And we can't hear you. Or John, we can start with you maybe, and what you saw.
Hello, sorry about that. I didn't know you couldn't hear me.
Okay, we can hear you now.
Jimmy?
Yeah.
Hear you now.
Yeah.
Okay. Did you want to maybe describe something in here for your trade?
Yeah, I've got it on push to talk. Can I just change my setting over quickly?
Perfect.
Yeah.
One sec.
Jimmy sounds like he's from the northwest, if I'm correct. Dan will correct me, won't you, Danny? Danny Ocean. I think
Can you
so.
hear me?
I can,
Yes.
fella. Yeah, welcome. Great to have you.
Hello. So this one's the okay. Yeah. So I've just been following the strategy I've learned from the YouTube I've watched. The Trendline break accumulation.
Yeah.
So the markets came down. This was the correlation between ES and Nasdaq. So I didn't actually enter on this one. I entered on ES.
Okay.
But this was a correlation. I entered on the aggressive accumulation, I think.
Yeah.
After the it come down, and I think it was the previous day's low where we've had that absorption there and the trend line break. And then I always try and look for a little tiny flip of the book when I enter, which I think you can see by the number 3 there, or am I wrong?
Maybe a little bit in here. Yeah.
Yeah. But I have a really hard time sometimes with entering on a short using this strategy. Sometimes I can get the entry wrong.
Okay.
So what's happened here is the markets came down. It's filled an imbalance at the previous day's low.
Yeah.
We've had a flip of the book after some absorption. It's retested the imbalance in the middle there. So yeah, that imbalance, it's come above and it looks like it's retested it and just flew straight up. And then it's retested that green box. And I think the target for the day would have been the liquidity imbalance above. But I didn't go that far. I only targeted 27.6.
Okay.
So I usually target low volume nodes for me exits, to be honest. Rather than the imbalances. I try to look for low volume nodes and I anticipate that they'll be filled.
Okay. Sounds good. There's I think this is kind of a common theme. If you go back and just I'm sorry, John, it's your coaching. I'm sorry, you jump in and go ahead.
No, you go ahead. That's fine. That's no worries.
No, just let the file play out and you can trade it again and again, and then kind of pick the one that resonates best with you, because there's still a lot of file left in this. If we look up here, You know, it's up here. It's about, you know, over halfway done. But you know, I don't know if it came up here or not. I don't remember this replay file. But you know, I try to record them and pick the things that make the most sense. Maybe it just traded up into the figure up here, and this liquidity that was up here. But you know, instead of looking for these small little you know, nodes to maybe to fill,
Yeah.
you know, zoom out like Vinfra has learned to get a bigger picture, and I would recommend the same.
Okay.
Yeah. John, I'm sorry to kind of trample on your feet there.
No worries. So there's a couple of things here in terms of best practices. Number one is that really should make a habit of highlighting the key level that you're working on, whatever it is, by way of
Yeah.
a horizontal line across your chart or a rectangle, but that really should be a part of your thought process, and it should be on the chart. So when it gets there, you know it, and it's whatever it is important to you, previous high, low, gamma levels, whatever it may be. And then yeah, so that's where you know where you're working with, if that's the level. I don't know if that's the level. Is it 612 or?
It's kind of hard with the replay files. This is one of the issues with the replay files, because we don't have the higher time frame context really. Sometimes we're able to get it in here, but other times, like, you know, we don't know, because it might be 12, but you know, from hours ago or days ago.
Okay. Well, the other thing is that lots of times it's easier to see the volume bars if you grab a hold of the number on the left-hand side of the chart and just drag that up. And it's
Yeah.
transparent, so it won't affect your scale, but sometimes it's a little bit easier to see transitions. And then the other thing is that while you're learning the process, I think the easiest thing to do is just to deal with one set of data. If you're doing a correlation between two, I think that really kind of confuses the process. So I would recommend
Okay.
that you just stick with one data source and just work your understanding of what the order flow elements are telling you as you go
Thank you.
along. So Bruce, this is one of two charts. If we can go down to his next chart, it's going to show a little bit more detail of the trade. And that way we can discuss it a little bit more.
Okay.
Here we go.
Yeah.
Okay. So nice job recognizing the accumulation on the way down. You identified the absorption very nicely. And you can see the transition where the absorption, where the sellers, they sort of move into more of an accumulation phase. That's why I love those volume bars down at the bottom, along with the volume dots on your chart, right? So between the two, you can see the difference in the colors. All red dots coming down pretty large, and then that changes. So you know you're possibly in a transition phase. I thought your patience were great, waiting for the volume to come in. You joined that volume, and the trade went. I'm not sure I understand why you didn't pinpoint 64.10 as your target. And I don't know where this thing goes. And my practice is that I don't look to see where it goes, because I don't want to have a bias. I only want to look at what's on the chart available to me at the time, because I don't want to skew my brain to thinking, oh, I should have seen this or that. So I try to isolate my view with what I see. But did it go up there? Because I see all the liquidity on top and very little coming in. And then I see a little skew right underneath the market. But do you know if it went up to 10?
I think it might have. I'll have to recheck tonight.
No worries, no worries. But that's these are my thoughts. But I think in general you did a nice read, especially with the transition from sellers to buyers, and entering with like-minded buyers. So
Thank you.
very nice. Yes, sir. Bruce.
All right, great stuff. So I have no other comments. Let's move it over to David.
Yeah, no, welcome again, Jimmy. Great to see you.
Hello, David.
Welcome. Charting and everything else. Look forward to you coming along often, hopefully. The
Thanks.
echo of everything that's been said. The thing I would sort of re-emphasize here, Bruce, is that liquidity down at 6390, just a little bit above. This is a tease trade. You've heard me talk about that before, where the price is scooting down, it's going towards liquidity. It doesn't get there. And then you get those trapped. You get those trapped sellers in this case. I don't know if we can see that, Bruce, within the. We haven't got the chart volume profile, but when it's coming down to this level, Jimmy, I'm thinking: are we going to go through it, or are we going to, as I call it, a tease? It's come down, it's missed it by a couple of points, half a point, or whatever, and then in come the buyers. You've got that transition from selling to buying with the volume bars that you've rightly highlighted, and then you've taken the trade away from that. You've taken that tease trade. And again, my line, we see these type of things all day long. We see them more often when it's going up, when we're charging up towards a level, and you saw that into the close tonight, where we're scooting up, there's some blood there, it doesn't get there, and then it really aggressively pulls back. But here is the reverse, so well done on that. Back to you, Bruce. No, welcome.
I turn it right over to trading his life with stop management.
Good point.
Hey, can you come back to me, Bruce, please?
Okay, back to D&T.
What's up, Jimmy? How are you doing?
Hello.
Hey, I know you're pretty new, right? And you've been doing these for maybe a couple weeks now in the pilot program.
Yeah.
Okay. And I noticed that. Did you like that rectangle last time that I had drew? And
Yeah.
have you been trying to practice that a little bit?
The base at the bottom, yeah. The pullback to the base that was made at the bottom. Would that be that absorption level, the balanced area there?
Yeah, exactly. So I think I gave you the example last week on a low volume pullback. Is that right?
Yeah.
Okay, and this one's a little bit different because it's a trendline break accumulation, a reversal. But if you can use that kind of a similar concept here, where if you drew a rectangle around that bottom structure, that lower structure there, and you don't know if it's going to break out. You're assuming it's going to keep going, and it's like David said, it's like a tease trade, and if you're buying that high. You're buying the high of that rectangle. You don't know it could come back. It could come back to you and stop you out. And you might have experienced that a lot already from these replay files. Yeah. See, I mean, and that's a common thing, and that's just how reversals are. You don't know if it's going to keep going or if you're buying it, but see, you're buying the high of that rectangle, and that's. It's not like it's a bad thing or anything. What I'm trying to say is, if you wait for that market to kind of impulse out, and you see it kind of does. So after your entry, it keeps going, and then it starts to exhaust and it starts to pull back a little bit. And that pullback, it at 63.97 is a pullback to a low, to kind of like to a low volume node there. And your entry is a good entry because it's at that point it's breaking out of that. But then not only does it break out, but you get the continuation. So it's almost like an impulse up even higher, giving you a bit more confidence in this trendline break accumulation that it's actually going to go. And then you get that slight pullback, and it's difficult to enter at that 97-ish. I mean, I get it. And then we talked about the trendline break accumulation, where they just don't really give you a good pullback, and it's really difficult to enter. In which case, if you don't get that pullback to the rectangle, which it kind of doesn't here, then you can try to keep waiting and wait for a decent low volume pullback to appear later in the setup if it appears. You can keep trading these and keep replaying these and keep kind of practicing and see what kind of fits your style. I recommend you try the different things that I just mentioned here, and then try different things and see what kind of fits your style. And then
Thank you.
and just kind of play with it and see what kind of fits.
So the safer
Sometimes,
entry would have been above that level and on the retest.
say it again. I'm sorry.
The safer entry would be on that retest at the 97.50.
Yeah, you've
That
got
would
more
be
volume coming in there. Yeah.
Yeah, that would be pretty good. I could see how it could be a difficult entry. That would be a decent entry, though. Uh, I'd probably be looking at that if it fits with the playbook. So, like, you're gonna that's the kind of the hard part about replay files, but you're burning this in your brain. You're learning this. You're learning this setup first,
You are.
and you're
Reps
learning the
and sets.
difficulties of it, the rockiness of it. You're learning the hard. Like you're riding a hard boat here, but once you really start to get the feel of it, and then you take this to the live market, and then you start setting up a bias, and then you start creating your impetus for your trade and your key levels, and if it fits your scenarios, then if the setup is showing up, then you just have to define your risk at that point for your setup, and that's really what you're kind of trying to do here in replay. You're trying to see, how am I going to learn, how am I going to start trading this setup, how am I going to start trading this
Yeah.
trendline break accumulation setup. Am I going to buy at the top of this rectangle, or am I going to let it prove itself by pulling out and then pulling back into the rectangle for a buy, or am I going to try to chase it and then risk getting stopped? Where if you have that rectangle drawn, you actually have defined risk, and if it pulls into that rectangle and you buy, then your stop has, you could put your stop maybe at the bottom of that rectangle, and you know where your risk is at instead of kind of guessing.
Okay. Thank you.
Jimmy, are you a blue or red man?
Yeah, I'm a red.
Perfect, sir. Perfect.
Thanks. What about yourself?
Oh, I'd be red for sure.
Yeah, nice.
For sure. Bruce, can I grab the mic and kick you to the chat, please, for my chart? David. Now, why this chart is what you're doing here, Jimmy. So if you, I'm echoing really what TNT said. Rinse and repeat. This was the low of the session. We had my chart up a bit earlier on, and that was later on in the day. This here is where the market dipped. You can see where my entry is, Bruce, basically. We came off an option level. It's the very small red text. I always call those, John, the international date line. I know that annoys the hell out of Brent, but this was today. Yeah, this is early into the session, London time frame. Price has gone down very, very aggressively, but for me, there was a very clear transition from selling to buying on this chart, and you can see where I got in. And it's got a lot of those things, Jimmy, that you are learning. Now, this went 100 points to the close, and I know quite a few people stacked me within Spot Gamma on this one. So learn them, which you are. Learn these, and you'll do well, sir. Back to you, Bruce.
Thank you.
No, welcome.
No, great, David. Nice applying today's action to it. So
this is it.
Fantastic.
Yeah, I'm keen to show them. And a bit like with Jimmy's trade here, sure, where I got in was a bit aggressive, all that great stuff. But look at the volume that then came in just to the, the right.
Supporting your idea.
Yeah. This is the thing. This is the real stuff. Real market today. David Real Trading today. Yeah.
John.
Well done.
To call it.
Yeah, let's go back to Jimmy. Can we?
Sure.
All right. So I agree with what he did. And I think in this instance, the way that this chart sets up with the transition that occurred first, where he has it highlighted with the absorption, and then you have that massive amount of volume entering into the market. Lots of times you're going to miss if you try for a pullback. In this instance,
exactly.
If you have this clear transition that's occurred, you have the trend line break, and then you have this massive amount of volume coming in, and you have clear liquidity on top. So, once you start scaling in, if you want to put part of it on and then wait for a little bit of a pullback and then get totally capitalized and in the trade, invested in the trade, fine. But I think for right now, get the trade on with this look. You have the transition, you have this absorption, trend line break, lots of volume comes into the market. You got a target above, you nail it. Because
Thank
I
you.
think you might be pinching pennies here, and you might end up losing out on more opportunities. Back to you, Bruce.
Wait.
Oh, great comment, John. Absolutely. Like this thing usually, this is like it is a big distinction. Like a lot of times, this setup here, the expansion is so quick that you don't. You're gonna try to get an entry, and it's gonna be like 10 or 20 points higher. Whereas like you start just like you said, John, I mean, look at the volume in here. Like here are pockets of volume down in here. And also you've got the accumulation on your side too. So you've got buyers in here and you've got buyers in here. The structure breaks and you got a lot of buyers coming in. Ride it, you know, and then trail your stop. So I'm going to transition over to trading his life because I'm sure he's got something on that.
Definitely.
Yes, I'm ready. Thank you. Um, hey Jimmy, great stuff. I've been seeing your post. I me and you spoke in the
Thank you.
chat room. Um, to agree with John. I think your entry was spot on due to the fact that, like Bruce was saying, you had the elements in your favor. You had the absorption, then you had the transition from sellers to buyers, which you had the liquidity below, and you entered once you saw that volume, that big green bubble, you just entered. And
Well,
I
my,
think
my actual entry confluence is a flip of the book. I won't get in unless there's bids supporting the rally.
yeah, and then look at the large volumes. So I think your entry was aggressive, but you had reason to be. So that didn't even go against you, not even one tick. It was just like get in and go. So you didn't miss. Your stop loss. I think you placed it perfectly right above the trend line, because if it would have broke the trend line, most people I would have put it below, which would have been too much. Because if it broke the trend line, it would have tanked on you. So I think you put your stop loss perfectly right below the little exhaustion right there. Yes, Bruce. I think he placed his stop loss perfectly. I don't know how fast this trade went, because soon as I got in, I would have and it broke the triangle, I would have moved my stop loss immediately and put it right under my entry, right there. Yes, exactly.
Yeah, but
Right under my entry.
when would you do it?
Uh,
Here, right in here? Like maybe it came up?
Yes,
Okay. So,
yes,
all right. So this is what it would look like. It would be like here, and then at this point here, you would go up, and you'd probably have it right around here, and then you'd
right
probably
there.
yeah
Yes,
until it broke that up there, and then you'd probably trail it up. I don't know,
yes.
maybe
Yep.
something like that.
Then one,
Okay.
yeah, right there. Perfect. Yep, I would have put it there. And I think he exited perfectly. He didn't let it go against him at all. So that whole trade, it didn't go against him, not even one tick. So I think you traded that um excellently.
Thank you.
Um, I want to bring up another point. I know I always talk about this. This refers to the journal. Um, this will help you because I started using it. If you go in the journal and you do your trip history, it gives you the, I don't know if you guys know what it stands for. It gives you the MAE. Look at the MAE and look how many ticks the trade went against you before it went in your favor or stopped you out. That way, you could keep in mind how your entries are. Because if you have a large MEA, that means you're getting in the trade too heavy,
Okay.
too early. I'm sorry. So
Yeah.
monitor that. It's called MAE. That's
M
how
M
it tells you how many.
I'm sorry, go ahead.
It's MAE. It
Yep.
tells you how many ticks the trade goes against you before it goes.
Okay.
Yeah, exactly. Right there. You see it? This trade right there. The trade went against this person 12 ticks. Even though, look at the second
Yeah.
trade. Even though that trade was profitable, but the trade went against him 12 ticks before it started going in his
No,
favor.
this is your journal.
This is my journal.
Yeah, it is.
Well, this is before I started, but as you can see, but now if I show you, I'll share my journal with you. You'll see my MAE is usually like one or two, three ticks the most the trader go against me because it helps me out with my entry. Because if 12 ticks, that means I got in that trade way too early.
Pretty early, yeah.
So as
What
you can
if do you see on my trade the way where the absorption level is, it pulls and goes lower? Would that make you wanna exit your position? How do you know it might not come down?
well, I have a rule. If it goes more than 6 to 8 ticks against me, I'm exiting. That means I got into I don't even let it hit my stop loss.
Okay.
Because that means the trade either I got in too early or my decision was totally wrong. I can easily get
Thanks.
back in. So that's my rule. If it's between 7 to 8 ticks, if it goes against me, and then I review those at the end of the day, I look at my MAE and look at the trade, whether it was profitable or not, to see um, what was my MAE. That helps me out with my entry.
Yeah, these are old. This is from your first replay file, I think.
Yeah.
Yeah. Yeah, this is back in, I don't know, last summer or something.
Yeah.
Okay. Great.
But I just wanted to mention that. So to the academy and the
I
pilot
will.
program, just keep track of that. I think that would
I will.
improve you guys' entry and be mindful of the stop loss as well.
Thank you.
Okay, that's it, Bruce.
Okay. Okay. Just one quick note on that, I think that is valid, is we've actually so MFE and MAE, so maximum favorable excursions and maximum adverse excursions. So this is how much went against you, this is how much went for you. And there's another one though, and you have to check the box over here. You can put in commissions, you can also put in post MAE and post MFE. I would suggest it, put them in, and you'll have to scroll here to horizontally. But then what this does though is pretty nice because I don't know the criteria exactly, but it's a number of minutes after, like how much more did it go against you or for you. So like in this one here, like you can see like this went against him, after he was finished with the trade, it went against him more. So he got out and saved himself some ticks there. So this is how you can look at this and say, hey, I'm making the right decision or I'm making the wrong decision. I should have let this run, or I should have cut them earlier. Just like Trading is Life was just talking about. So these are some interesting stats to take a look at.
Thank you, Bruce.
Thank you, Jimmy, and welcome to the program. You're off to a great start, really.
Thanks.
Yes.
Thanks everyone else as well who's just giving me feedback.
Oh, very welcome.
Oh,
Here's another one, Bruce.
Oh, okay.
Yeah.
Right here. Okay.
This is a good contrast too.
Okay. Then I don't know, John, you want to start off?
Go ahead. Let him have his.
Okay. Jimmy, you got one more for you, so you're not off the hook yet. Why don't you walk us through this one?
So, the key level. Asia low is above where the market came.
Okay.
So you've got all that imbalance on the Asia low. The market came down and you got passive accumulation. The first red, see where you've come right down and you've got that red volume node on the bottom. That looks like absorption.
This one
On
here?
the left, sorry.
Oh, this one here.
Yeah.
Okay. Yeah.
That looks like transactions being made and absorption there, followed up by more passive accumulation and more absorption. And then the trend line broke, but it didn't carry on. It pulled back into that base before carrying on, which I was stopped out obviously on the pullback. And it did end up going up to my target as well. I watched it through, so maybe I entered too aggressively there, because I entered at the very top after the first break, and it looks like it's impatience, I think.
Okay. John, jump in anytime.
Yeah. So this is what I see. I agree with everything you said. The setup was there. You're seeing the accumulation, you're seeing the transition, and you're seeing the entry right at the trend line break. But you see what happens right after it. And this is just like we were talking about before. Sometimes it'll go, sometimes it won't. But what's different about this entry is that as soon as you're in, or you're facing liquidity at 16, that's almost like running in the skew. So you're going to have to take that out. Whereas on the previous trade, you had more of a clean shot upwards. So I don't like to trade into that liquidity, because I'm going to have to take that out. And if I don't take it out, then I want to get out pretty quick. And in this trade, if you look down at the bottom, I've marked it where it makes that transition right in absorption, right where it goes from green delta bars to red. And I drew that little yellow line there coming up, Bruce, between the market just kind of takes a squat. And that's when you know you may be in trouble at that point. So you managed to risk very nicely, but that'd be a red flag for me that says this isn't going to go. Two things that are wrong. Number one, I'm facing that liquidity at 16, and then the market just takes a squat here with sellers coming in almost immediately after I got in, and then the market did nothing, and the market went sideways until finally volume came in, and that's a different trade altogether. But the one that you took, that's what I see as the two problems with it. You're facing that liquidity, and then immediately after you're getting in, that doesn't follow through. In my work, I want to be able to get in, everybody does. They want to be able to get in and see the thing go. That's the basis of the trade, because when it takes off after that trend line break, it's an expression of what's already occurred previous in that absorption. You follow what I'm saying, Jimmy? It's accumulating and it's accumulating. It's almost like compressing a spring. I want to get in when I think that spring is going to unleash. And what is an indicator for me is when that volume comes into the market, and that'll
That
carry
red
me up.
volume bar would have
The red volume
made
bar,
you
that would have been a problem for me. Yeah,
yeah.
because I'm facing that liquidity just above, and I see that negative volume coming in. I'm thinking, oh shoot, why fight it? I want the ones that are going to go. That's how I design my risk, because I want to be in the market as little time as possible, and I want to be in it when I think there's a surge impending. Bruce?
From you.
Yes, sir.
Yeah, really nice choices, John, for coaching here, because like playing off of that other file, this is
Exactly.
it's a really
Good contrast.
really good contrast here.
Yeah.
Because if we, well, I don't want to, we can jump back I guess quickly, but like the previous file, like that transition was I think it kind of hits you over the head here. Like maybe it does it here, right? But like it doesn't really. It's kind of saying like it's competing now.
Yes.
And you've got like you said the passive accumulation, but it's starting to compete. But I don't think it's kind of worked itself out. But here it's looking pretty good. And here, and then this probably streams probably right up to it pretty quickly. I imagine. I don't know. Play the file. You've got a lot left in it.
I will.
And Just so this will help keep you out of those things. And because like when you do get that move, like we contrasted it with that last file. Like if this was really, really strong in here, this is a perfect entry. No problem, you know. But if it's not really that strong, it's still kind of transitioning here. Now this is the perfect entry. Anyway, play it again and again.
Maybe a little earlier too, because once
Maybe.
that volume comes in on that second group, Bruce, you can get in at 12.50, 13, and then your first hurdle is going to be at 16. So you've got a few handles of profit that you can pull your stop underneath and protect yourself with a break-even presence in the market, right? As far as locating your stop are pretty tight.
Yeah.
Because if it doesn't break through there, you're not going to lose. It's not going to fall back on you. So that's where that plays into where that liquidity is, where that skew is.
Yeah. Other than that, like I mean, like I'll let Trading His Life take it over here on the stop loss.
Okay. Agree with John. Jimmy. Rule one. Don't get in a trade if you see liquidity right above you, because those are sellers ready to push it right back down. Always let the hand play out first. Let the market tell you what it want to do. Don't just assume because you see that large green bubble, it's gonna go. Because that's sellers, right? That's a block that it has to fight. Always wait for the second time around. And I commend you for putting a lost trade on there, because everybody puts a profitable trade and you put a trade that didn't work out. So I commend you for that.
Thank you.
And so now let's go over why it didn't go in your favor. Number one rule, you had liquidity right at 16, like John mentioned. It would have had to fight its way. Now your stop, I would have put my stop a little tighter. My stop would have went right under the number 4, because I wouldn't have gave it that much room, because that liquidity right there. So that's one. Right there, exactly, Bruce. That's where my stop would have been. As you can see, it went through your breakup structure was like your support. You see, it went through. I would have entered right at 16, actually. I would have entered at 16, and my stop loss would have been at right under the liquidity. Right there, yes.
So right down here.
Yeah, right there at 42.12. Yeah, right there.
Okay.
So I would have entered there because it broke the previous, made a new high. And look at the transition. Look at your volume. Nothing, there's no sellers in sight. There's nothing but buyers.
Yeah.
So that's how I would have traded that. But that's why
With
the
your
trade went
entry,
against you. Go ahead, Jim.
with your entry, would you have your stop below the tiny red dot on the
No, my stop would have
aggressive
been right where
accumulation?
you see where Bruce marked the yellow line, right under
Oh,
the liquidity, right there.
yeah.
That's where my stop loss would have been, right above 64, 12.50.
Yep.
So that's where I would have entered. It broke my structure, large volume, nothing but buyers, and this is a base hit, and my target would have been 64, 18.75. If it would have went through there, I would have trailed it to right there. Exactly. Those would have been my targets. My first target was 64, 18.75 base hit. And if it would have just pushed through that with volume, then I would have just stayed in the trade and trailed my stop.
Okay.
Makes a lot of sense. Yeah, thank you.
Yep.
Yeah, but don't ever get in a trade with liquidity right above. Let it
I won't say
play
that.
out
I'll
first.
remember that.
Yeah.
All right.
Thank you, sir.
Right back. No problem.
So,
Right
so
back to
Jimmy,
you,
there's
Bruce.
there's a lot going on here, Jimmy. I mean, we're taking all this time. The chart is static. So I don't want you to think that we're being overcritical because there's a lot of information here. What we're trying to do is
Yeah.
just describe each of the elements that you can practice independently so that you can process it in real time. But I just wanted to make sure I said that because the work that you're doing for as long as you've been doing it is extraordinary work. So keep
Thank
going.
you.
Yes, sir.
No, I tell them all the time in the chat room, John, that he's doing a phenomenal work.
Yeah.
Guys, I mean, just I do need to, before we turn it over to DNT, and we got to move on, but like a quick comment on this, and this is kind of important, is on almost all of these, there is almost always high liquidity on the other side.
Yeah.
You know, but we're looking for a transition from sell side to buy side, and we're looking for these guys to take all of it on and trade through it. And it's kind of it can be kind of a tricky one because but that's a breakout trade at that point, you know, and we're looking for that imbalance in demand over supply, and we're looking for it to move. So they're going to take it all, else if you know see that, like, I mean, go through this trade many times over, you'll see that you know, typically they may pull, but a lot of times they still stay in here. So but we just want to make sure we understand that transition and that imbalance, because they'll trade right through it, and that's a really strong breakout trade. So anyway, just a note on that, and DNT, and then we got to move on to Zaback, because
Thank you.
he's on deck.
We were supposed to be at Zaback about 30 minutes
I
ago.
know. I'm sorry.
This is such a great contrast, John. I think it describes well, I think, what Bruce just said. And I mean, what I said at the last trade is pretty much exactly what we see in this trade. Do you see that, Jimmy?
Yeah. I haven't waited for the pullback into the base.
Yeah. And if it fits, see, what the goal is here in the pilot is to take these setups, and then we bring them into the playbook. And in your playbook, when you go to the live market, you're going to be trying to draw up your playbook, and you're going to be drawing up your impetus, your key levels, your scenarios. I just said this, but if this fits your setup, I mean, if this fits your playbook, and you see the setup unfolding in front of you, you see support on the passive support, passive accumulation, and then you start to see the aggressive accumulation. So aggressive support start to come in. So you're seeing that transition unfold, and then you get to choose. You get to kind of choose here what kind of trader you want to be. You can try to chase it and see how that works out for you, and
Yeah.
or you can try to wait for it to pull back into the rectangle so you can get your stop where it needs to be. And this is just my experience, which is after chasing a ton of these and trying to find an edge in the reversals, which is very difficult, waiting for that pullback into the rectangle, or even at the top of the rectangle, let's say where you got stopped out at. Well, that's
Yeah.
you're still at least getting some defined risk at the top of that rectangle. But when you're trading outside of it, you have a skewed entry, and then you have to skew your stop to fit the structure. You're not trying to fit your and this is different from what Trading is Life says. He's saying 6 to 8 ticks, and I'm saying structure. So you kind of have to figure out what kind of you could play with both, and it's going to change too, I think, as you go, and you have to decide, what do I want to. I'm going to try to do Trading is Life's idea, and try it out, and then the next day you might be like, okay, I want to try DNT, or I want to try this idea. Well, and that changes day to day, and then you start to see what fits your risk profile, how you like to trade. and that's okay to change, and it's okay to take things from everyone and kind of make your own thing too. So
Thank you.
yeah, that's just I wrote a little note in the academy um, to you and everyone in the pilot program of my journey or my experience going through the trendline break accumulation, which is
Yeah.
I have grown a debt. I've really liked to wait for the market to kind of form clean structure on it, and then and enter inside of that. And if it doesn't really give me clean, like a clean entry with like good risk, then I'll be I have to be like, me personally, I kind of like to wait and just let it go without me, and then just wait for a low volume pullback to kind of occur to form itself. And that way I'm not chasing. I'll do a skewed entry in the live market if it fits my playbook and I don't think a pullback is going to come. But
Okay.
usually I have grown to like just to wait for the market to kind of work itself out, and I'll wait for another entry a little bit later.
Yeah.
So
Oh,
that's all.
okay.
All I've got to
All
say.
right.
Appreciate
Thank
the
you.
voice, man.
Thank you, Jimmy. Thank you, DNT. I think you got an earful there, Jimmy. So
Thanks, thanks
yeah,
everybody. Give me some feedback there.
You bet,
Thank you.
Jimmy.
you're
Yes, sir.
very, very welcome. All right, guys. So let's move on, and we will go to Zaback, and come on up. Hello, you're still on mute. And we got two trades from you, and it was Moby who went through them. I'm kind of inclined here because this is trendline break accumulation in replay mode, and you did a pretty good job here. There's one here forward testing though. I kind of prefer to go over that one if you don't mind, or I don't know how you guys feel. So this is a low volume pullback here. Let's go over this one.
Yeah. Yeah.
Zaback, walk us through.
Well, Bruce, thank you very much. Can you hear me?
Yes, perfectly.
Oh, thank you. Thank you. This is a solid program. I really enjoying it, learning a lot. And first of all, I would like to thank you and coaches for their efforts. This is it's a difficult trade. It is sim. Yeah, let me just make it bigger. Oh, what did I do? I cannot make it bigger. Okay. So this is kind of, I was, following this trend line. Yeah, I missed the TLBA, right there. And then I missed the initial impulse. Yeah, right there. So I was like, when I see this impulse, and I started, and I missed the whole thing, of course. And then I started thinking about pullback. And then, so there was a first pullback that right here.
This one?
Yeah, that one is, I totally missed it. That was
Okay.
a nice one. And then also there was another one that, just above the number 2. And
This
yeah,
little pullback here?
yeah.
Okay.
So So I was able to, you know, the low volume note here, and then the number 2 is the yes.
Yep.
You can see easily that, you know, the volume was tapering down below, and yeah, it turned out that, you know, my entry was on hindsight is a little bit early, but I had you know, stop loss was a little bit wide, I think 30 ticks, so that saved me to stay in the trade. And yeah, what else I can say here? So it was a long pullback. Definitely, it is. This is Eastern Standard Time, New York time.
Okay.
Yeah, that's all I have to say. You know, like, and then basically another thing that I did is I moved my TP up just in front of the liquidity area, right there. Yep.
Yep. Nice. And hit your single and get out.
Right.
Beautiful.
So yeah.
Yeah. Boy, I don't know who
So
to turn. I'm sorry. Go
yeah,
ahead.
this is choppy pullback. You know, it was difficult. You know, I made a decision several times. You know, should I get out? You know, with the you know, or should I stay in the trade? So it moved against me, you know, several times. Yeah.
Yeah. Okay. Let's see. D&T, why don't you start us off here?
All right, Zaback, good work. I see you posting a lot too. This is good stuff. Let's see here. And I like two things on this one for sure. I like that you drew the arrow of the depleting of the volume bars. You drew the arrow of I think that you should be drawing that arrow on the buyers though, because you're looking for the buyers to come. You're looking for the pullback into the low volume node, and you're looking for the buyers to exhaust. So, I like that you drew that arrow, but I think it should be on the green bars.
Right.
Right. I don't know if you mentioned that. Sorry.
No, I didn't.
Okay, so that's when on that pullback, you see buyers coming in heavy on that pullback, and as it keeps going up, they start to exhaust and exhaust and exhaust, and that's what I want to see when I look at these low volume pullbacks. I want to see those buyers exhaust, and then I look for that, and then I'm looking to enter. So yeah, it's like, and then if you're looking for a long on the opposite end, then you'd be doing the opposite. Then you'd be drawing the exhaustion on the sell side. So you want that low volume pullback to start to get weak, and you just want them to exhaust. And if they come in hammering it, then that's usually when I start to bail. But yeah, this looks great, and this is a perfect example of what we just covered with on the last two trades. Just elaborating more of like what I was talking about earlier, which is I would miss this trendline break accumulation as well. I probably likely would have missed it. I'd be waiting for that pullback, and I never would have got it. And I can only imagine trying to short this thing. I could see David selling with that sell volume there.
Big time.
Yeah, I can see that. But I can't see me doing that. I'd be waiting for that pullback, and I probably wouldn't have got it. So I'd be looking like just like you, waiting for the low volume pullback as a second opportunity. I think everything on this is great, except your little arrow, except the arrow on the bottom where the buyers. You actually should put that arrow on the buyers instead of the sellers.
Right.
Great trade.
Okay. Let's see. Turn it over to John.
Okay. Bruce, right under the entry, could you highlight on the volume bars? Just put a rectangle around those volume bars just below his entry. So straight on down from there. Yeah. Just put a highlight. It's going to be over a little bit.
Over
No,
more.
what I'm trying to capture is just slightly to the left, those volume bars. This is hard.
These ones here.
Yeah, right in there. That's what I'm trying to capture.
Okay.
So that's right in the area of where you entered short, and I don't see
I'm with you,
a
John.
short there.
Not
Yeah.
quite.
You know, you follow me? You want to
Yes.
see you see some accumulation, but you're not seeing a transition to net sellers, and that's what I like to see when I get in. So, uh,
Yeah.
for that reason, I think you were early. But if you wait a little bit, then those sellers start to present themselves, and you can see later on. Bruce, can you
Mhm.
highlight? Yeah, there you go. Now you see the, and then to the right,
Mhm.
and then to, yeah, there you go. Now you're seeing a different picture, right? And
Mhm.
now you can begin to make a case for, well, maybe we will go down there and attack that liquidity
Mhm.
below. But
Yeah.
that's where those volume bars are
Mhm.
unique to Bookmap, and they're very helpful because they're giving you this information in real time. And
Mhm.
and that's, I when I'm buying, I want to be behind, I want a bunch of people behind me, and when I'm selling, I want the same thing. And I just didn't see it here, so that's all I really wanted to mention. But you're
Mhm.
doing great stuff. But look for that, test it in
Mhm.
your market replay work, and I think you will find that to be a great guide to your
Mhm.
entries. When push comes to shove, which way are they going, right?
Yeah.
Am I joining them or am I going against them? You were going against them here. In fact, it was just kind of choppy, like you said, and you knew that, right?
Mhm.
And that's how you can identify it for sure, right?
You know, in the moment of making the decision, there was a, seller liquidity, versus if you show under the number 3, there is a, there is a seller
Mhm.
liquidity. Yeah, basically, they, buyers took that out, and then, you know, price started going down, and then I
Mhm.
panicked, and then sold the.
Yeah,
So
that's why that's why I always like
basically,
to use.
that's the trick. You should
Mhm.
have.
Well, that's why I
Uh,
like to use both liquidity and volume. The liquidity
yeah.
marks the intent. The volume matches up with what they're doing. So when you
Mhm.
have both working in sync, then I think you have a case,
Yeah.
right? Okay,
Thank you.
Bruce. Yes, sir.
Yeah, great. Let's turn it over to David.
Thank you. Yeah, hard to add a great deal from the final analysis there by John. Thanks. Time of day. 11:30, if I've got the charts right here, Bruce,
Yep.
is my London close. We had that on Jimmy's chart as well, that we were trading through the London close. So I'm exactly with John. I'm not convinced the volume was there to get in at that very, very moment. As you rightly mentioned, Zaback, earlier on at the top of the chart, Bruce, there's some great trading opportunities, particularly if we had a sort of channel coming from the top down.
I
That we spent some.
knew you were going to say channel.
We would,
I knew it.
it was a beautiful channel. Yeah, yeah. Thank you. I mean, you can see that all day long. So there's trades when we get out of that, but time of day is the thing really there to be thinking about. That the market does move, not always in sync with what you've got on the charts. You'll say that happens all the time, David, but really the price can scoot around and it hasn't got the volume, it hasn't got the liquidity, just simply because people are closing their European positions. Back to you, sir.
All right. No, good stuff. Time of day is super important, David. Great
Definitely.
point. Because we don't. I mean, this is actually pretty typical for this time of day.
Yes, it is.
And but like you said though, like recently it's been, or before we started, it was like, geez, the movements are happening after the close. Anyway, yeah, this is an important factor that I don't have it in the checklist, but we have it in the slide before every webinar. So it's a tricky one, Zaback, but I think I'm just going to turn it over to Trading's Life.
Hey, thank you. Hey, Zaback, how you doing today? First
Good.
question
Yeah.
I wanted to ask you is like, your stop loss is so wide. Why did you place your stop loss so wide?
It is so risk reward is 2 to 1. So it is like a 20 ticks.
Like you take that's 250, okay.
So basically, usually I take the 6 to 30, but recently I was trying the 40 20 ticks. So I am not sure if it is too wide or not. Again,
Based on your entry, yeah, definitely too wide.
okay.
I honestly don't think you had a trade there. I mean, you got in the trade prematurely as soon as it broke your trend line. Then you got with your wide stop loss, you got um caught up in the noise with the back and forth. You know, my nerves wouldn't have been able to handle
Oh
that.
yeah, absolutely. That's
Yeah, so you got caught up
nerve
in that.
breaking.
So you got caught up in that. And I actually think you have your trade was the prior trend line you had going up. Bruce, could you draw that go over that trend line going up?
What, this one over here?
Yes.
Okay.
So that's his trade right there. Because as you see, it broke the structure. The other trend line was basically his support. So it broke that structure. I would have entered right below that liquidity at 71.66. I think it's 71.66.25.
Here.
Yes, that would have been
Mm.
my entry. That would have been my entry.
But
And
but
as you can
still,
see, it went down all the way to where you exit the trade without all the back and forth. Then
mm,
my stop loss would have been right above that trend line.
mhm.
And then after it went down, it went back up. I would have moved my stop loss right 71.64. I would have moved my stop loss. No, my stop loss would have been right. My original stop line would have been right past the trend line, right at the trend line. Correct.
Okay.
And then my second stop loss would have been below the trend line after the exhaustion at 71.6250.
Hold on. So entry, stop loss, right? And then as soon as it breaks structure here, you would have moved it down to here.
Correct.
And,
Correct. You just had it. Yes.
yeah, and then
Right. Exactly.
as soon as it breaks structure, maybe over here, I mean this one here, right? Then you probably be bringing it down to
Exactly.
hard to see. You probably would have gotten stopped out to be honest, right here, because
No, but I would have been
it
playing.
came back up.
No, I would, but I no, it didn't. I was playing the other trend line, so it didn't. I would have moved my structure, my stop loss right above there, and then it went all the way down to where he got out. I wouldn't have got stopped out.
No, but I think I can't really see it, but it looks to me like it went up, down,
No, I
up.
wasn't. I wasn't trading this trade, Bruce. I'm trading. We see where the red line is, where he has his number one. No, over,
Uh,
not there. Over, Bruce, by the number one.
okay. So
Yeah, about.
you would have been out over here. You would have been. I'm a little confused.
Yes, right here. Exactly. I would have been right there. That would have been my exit. I would have never got stumped out. Because I would have entered where you said, where you had,
Yeah, here.
and the trend would have. I would have been trading this trade right here. That's my entry, correct? And then it went back to 64. Then after that, it was a flush straight down to that exit.
Okay. So you'd be exiting here.
I'd be exiting the same way he exited. Exactly. That's my trade right there. If you look at those volumes, that would have been my trade. So I would have avoided all of this back and forth. I wouldn't have been in that trade at all.
Okay.
Right there, exactly. Right there where you have the arrow and just right there. That would have been my trade based on that trend line. The other trend line would have been like a support. I wouldn't even had that trend line there before.
So let's see. I want to get to I'll just quickly go through Zaback. Just a couple comments, and I think that are important. Number one is I think we need to see a little bit more here in terms of structure, because I'm wondering where the structure is over here, right? I see the trend line, I know, but like, is this it? Or, because Trading is Life is talking about this structure here, and then that broke, right?
Correct.
But we have another structure. I mean, maybe it was over here. So you can, so I mean, market structures is such an important part, like David has been harping on, and the so maybe zooming out a little bit more, getting a little more structure in here, so we can kind of relate to that a bit better, because it sets up where this return or this pullback might come to. Like it might come all the way back up to here. In fact, it didn't, because we see the already pulled back here, totally rejected. So this is kind of the new structure
Right there.
in
That's like your
essence.
low volume pullback right there. That's it right there, Bruce. You
Yeah,
see what he
yeah,
did? That's what I was talking about.
yeah,
That would have been my stop loss right there.
yeah,
That's exactly what I'm talking about right there. And it flush right down. It's like a low volume pullback.
yeah. I mean, this is a low volume pullback. I mean, it's on lower volume.
Yes.
It's hard to read, and I think David nailed it. I think it's primarily hard to read this one because of the time of day. But I'm speculating on that. But to me, it looks like it, because market doesn't know what it's doing. But it's meeting your criteria, which you have here. You have it all marked up great. And I think kind of like this reminds me of maybe Vinfra's trades some weeks ago, where he didn't really show all the structure. It would be more helpful to kind of give you a little bit better insight if we could see a little bit more. And this area is challenging, no doubt. How do you deal with this? I liked your idea here. Flip of the book, on the bid, flips to the offer. There's some structure in there for sure. Here it is. Here, there's a little kind of, so that's what you're playing off of. And then as soon as you saw a little bit of selling in here after that, you're like, okay, I'm in. I think you do, like John said, I think you do need a little bit more. And even if you did have a little bit more, God, it's a tough one. I mean, it kept going against you and against you and against you. I don't know how I feel about.
Zaback he has nerves of steel.
Yeah.
No. So another point that Bruce is, if you look at the notes, key levels, basically, we broke down to IB high, and then opening, on the right hand side, the notes,
Oh, okay. On the notes, right, yeah. Okay.
On the notes, yeah.
IB
So
high.
it broke down, yes.
Okay.
So that gave me another confirmation that, you know, this thing is going down. So look for a pullback.
Yeah. Okay. But that makes sense. So I don't know. Time of day for sure. And other than that, it's a challenge. You know, I know this was a forward testing, so I wanted to mention one more thing because it's kind of important. Is about the forward testing as this pilot program, as we continue to kind of develop it out here. I think the forward testing, I will have more kind of criteria for you guys. I think the reason that the I've been getting a little bit of like feedback about and we've talked about it before, is that these replay files are cherry picked, and that is true. But I wanted to very clearly show the elements so that everyone gets started on the right foot. So you understand the elements, you understand the relationship, and then the forward testing is kind of like, this is giving you the oh wow, it gave me this, and it's not so clear, and then you get frustrated. Think of it this way, like, replay it again, and look at it and go like, are there reasons for me taking this or not taking this? And then like, you'll certainly remember next time, I might wait due to the time of day, and it's not really too clear. Or I want to see the other structure here clearer. What am I really trading? What is really the impulse move in here? Breaking away from what structure? Is it this structure here, or is it this structure here? Right? So that will help answer some of these questions. And Zaback, really great job. It's just I think important for the forward testing as we get into it to then look at it, and then I want to focus tomorrow on not trading during that time of day, or
Right.
I want to focus on where is my impulse move, and then what is the relationship to that impulse move. And those two things will help you a lot for the next forward testing. Okay. All right, guys, let's see. We got 10 more minutes left, and we didn't even get to the guys I wanted to get to from last week. So let me let's see here. Benegri is not in here, so we can bypass that one. But John, you had a bunch of people that you covered, and so we went over Jimmy, Tommy. We got one for you, and a couple for you, and there's another one, PMAG. So PMAG, we went over you, I think maybe last week at least, and Tommy, I know we've gone over you, but we didn't go over you last week. So we can go over Tommy, or let's see. David, you had Daniel Rui, so he's not in.
Yes.
He's not in.
So why don't we go over Tommy? It's been a bit, and we'll go over just one chart here. So we got this one or this one. David, you're the coach,
No,
I'm sorry, John is the coach. Which one would you like to go over? Or if we go over both, we'll go over them pretty briefly.
No, I think we can squeeze both.
Okay.
Let's try it.
We'll start
the first one.
We'll start with this one.
This is a low volume pullback.
All right. And let me get Tommy up on the stage. Sorry. See, there he is. And Taboho, another one. Oh God, I've got you. We'll go over you next time for sure, Taboho. Great work you've been doing. T. James as well, but he's sleeping at this time, I know. Okay. So welcome, Tommy, and John, it might be, maybe it's quicker if you go through what you want to discuss and then have Tommy react, I think.
Okay. Well, box number 1 shows the structure. Line number 2 shows the advance out of the structure. And that's certainly clearing out that structure, that box at it from 97.5. And then we get a pullback. We get some sideways action. And then you see volume come into the market that I've highlighted. Number 3 is the low volume node. Sorry, it's at 01. He identifies that and he marks a spot laterally horizontally across the street. Yeah, there you go. So he pulls back to that area. He's looking for volume to come into the market. He gets it spot on, I think. He's joining that volume. The thing that I didn't see in here was a clear target. And this is kind of what we were talking about earlier. There's skew. There's lots of liquidity right in the way there. So you're kind of starting to run into a brick wall before you get a little profit, unrealized profit in the trade. So that's the only problem that I see in this, that I would have difficulty unloading on this, because you have that skew sitting out there. You have that liquidity just above. But it did push up a little bit. I don't know how far it went, and I don't know where he got out. But I didn't see any stop management, and I didn't see a target. But it does qualify for the trade, with the exception of those two last things, the target and then that liquidity pressing against the entry. He's got a little bit. He's got a few handles there where you can get in, but it's pretty concentrated in there.
Yeah, so I think this one actually was the trend line break accumulation. Because I had my trend line there and I had passive accumulation, and then I was waiting for the entry. But I think, as I pointed out before, I didn't get the clear transition. So like, I think my entry should have been like, I think my entry wasn't good enough. And that's why I actually sent this in, that this is a bad trade. So when I was looking it back, I kind of realized that I didn't have enough passive accumulation. That's why I put the 2 question marks.
So was that an entry long or short?
Yeah, it would have been a short.
Because it's labeled as a low volume retracement. It's labeled as a low volume.
I made a mistake, but this is actually a trend line break accumulation.
Okay, then I misread it then. Shit.
Yeah.
Yeah, because it says
Oh yeah, it wasn't
low
that good,
volume
actually.
pullback number 53.
Oh yeah,
Yeah.
I messed it up, I think. Yeah, it should have been a trend line break accumulation. So yeah, but it wasn't that good because I should have had like more sellers stepping in, and when I zoomed out, you guys can see it as well, that the volume bars were like, they were still green, so I didn't really see many sellers stepping in, and probably should have waited for more aggressive accumulation coming into the market. And that's why I actually sent this one, because this was bad. This wasn't good, and I kind of wanted to go over this, that this is a bad trend line break accumulation. Yeah, this was a short.
So really, either way, it's a bad trade, right?
Yeah, exactly. That's
yeah. Okay. Shoot, I was going to have to check my glasses. Okay. Okay. Well, you understand. You know where you know where you got to kind of pull your understanding up a little bit. Okay.
Just let me just jump in quickly before I turn it over. Tommy, the thing that I see that that would help you working on, well, first off, I'll have David talk about time of day maybe, but like is this area in here is tripping you up. And this has been a pattern for a while. So I think really, home in into these areas in here and understand this transition, because it's telling you it's not transitioning to sell side. And where it broke the trend line, but it didn't break this structure. It's bullish. So what it's really weird if this is the close, but it's kind of a weird time. But to me, like, it looks like a fantastic, like it should continue. It just looks fantastic. But if it's in front of that, anyway, we'll talk more about this. I'll turn it over to David.
Thank you. No, great charting and great comments by John. So well done. I think you're quite right, Bruce. Just reiterating the point: the volume bars are not there. They're just simply not there, Tommy. So where John has put down the number 4, or you put down the number 4 down to that, right down there. You know, if you are going to break that structure, it's got to be massive. You need to have a really large red volume bar coming in. I'm not asking Bruce to flip back some of the charts we had earlier on, but if you're able to look at those later after tonight, just look at those large bars I have on my chart that are showing either buying or selling. And I've pulled them up really, really high, pulled my socks up to my knees, and my trade is going with those bars. It's structure and volume, as Bruce rightly reminds us. Without trying to steal all the thunder from Trading's Life, he's about to say it, the trade on this chart is round about whether it's 1320, 1325, where within that box number 1, you've got the volume comes in, you've got the angle taking us out. That's it. You know, that is David's trade, or a trade that I love to take. We've got a bit of congestion, we've got a bit of range in, volume comes in, bang. We'll have some of that, please. That's the. But I don't know what we call those, Bruce.
That's a breakout.
That's a breakout.
Yeah, I'll be going over breakouts, I think, next, because they help for both trendline break accumulation and low volume pullback.
Yeah.
So I know exactly what you're looking at, David. And then like you see a little bit more, and you're just like throwing more contracts on top of it.
Pouring gas all over that one.
Yeah, exactly. All right, so let's see.
Can we try to fit in Tommy's second trade?
Yeah,
We're
sure.
going to run out of time. I really would like to see him get this second one in.
Okay, no problem.
And this is the low volume pullback trade.
Okay.
Because I actually had a question in this one. Okay.
Yeah. This one was Go ahead. Sorry.
No, you go ahead. Tell me. Yes, sir.
Yeah. So this was the low volume pullback. So actually, I think the impulse move was pretty good. I had a horizontal structure there, and price broke out from the structure, and I think the volume was really good as well. If you look at the volume bars, the delta bars, yeah, that was pretty good.
Lovely.
And then I had the low volume pullback back into the low volume node, and I kind of, even if you look at the bubbles, you kind of see that they are like way smaller. Like you see all the bubbles, and there's kind of like not many buyers there, and kind of we went back into a low volume node, and then when the trend line was broken, and I kind of saw aggressive sellers coming in based on the delta bar, and when price made that lower low, I kind of saw that transition, and that's when I entered off of the big sell volume dot, basically. And I just saw that buyers don't really want to buy that based on looking at the volume dots, and then I saw that transition. I had a clear target as well. Like I kind of had like liquidity imbalance. I had way more liquidity below me than above, and that's why I took the trade. Yeah, so overall, I think it wasn't that bad.
No,
I think I trailed my stop. I'm not saying too aggressively. I just trailed my stop, and I think I got stopped at like break even, or maybe like a few, like 1 or 2 ticks in profit. But yeah, that was the trade.
I think you did pull your stop too closely, in my view, because you have liquidity right there, and they're just itching to get filled there, just above where your stop is. So you're asking to get filled. If you bring it in between price and nearby liquidity, and you get that big band coming in, it's a little expensive to go over that, but you could come up a little bit and let the market feed away at 51 and 51 and a quarter, in there about where you got filled. But the thing I really wanted to make sure I got to was your note here. I disagree with where you said no clarity in the order book. There is clarity here. Because if you look at 7140, you have that band of liquidity that's been in the market the whole time. Down a little bit, Bruce, right? Exactly. And then just above it, they're adding in at 43.
Yeah.
And then just above that, they're adding in at 45.
Yeah.
To the order flow trader, this is like Christmas morning.
All right.
Because they're layering in their targets, or at least for me. You see this especially with stocks. And so I wanted to make sure I got to that. Just practice that. Look for that in your market replay work and see how that can often preclude what's going to happen, where this liquidity lines up. There's lots of liquidity on this chart, but the most dense areas is where there's the greatest concentration of liquidity, and oftentimes that can be your target, especially where there's very little of that kind of action above the market, right? So there's an imbalance below the market price versus above it. You follow me?
Yep. Yeah.
Okay.
Yep.
All right, Bruce.
Okay. No, great stuff. Let's turn it over D&T quickly, and then everyone quickly give it one last shot here. I'm finished, but anyway, D&T. No. There you are. Now we lost you. Okay, trading his life. I know he wants to go over that. He wants to go over that stop. So let's go there.
Yeah, I was itching to go over that stop. I think you moved your stop a little bit prematurely because it didn't create a new structure for you to move it to, but you didn't lose anything. I think you entered perfectly. Um, like John said, I mean, as an order flow trader, as you can see these liquidities stacking, they're magnet. Price is gonna go down there. You should have I don't know if it went back up, if you didn't move the stop loss where you had higher high, that's where your stop loss should have been when you entered. So I don't know if it went back up and hit that stop loss, but it looked like it probably went to break even, then shot down and probably end up reaching your target. So I'll just make it brief. So like Bruce said, don't move your stop loss until it breaks a new structure. That new structure is 71.46. Once they broke that, then you could have moved your stop loss. Other than that, Tommy, I'll be seeing you. You're doing a phenomenal job, man. And you come into these meetings, you're learning. Just keep doing it. I applaud you. Thank you.
All right. Thank you.
All right, D&T, over to you. And we lost him. Oh no. Okay. Okay, guys. Good stuff, guys. And another great meeting. Thank you so much, coaches. Showing up, giving really good feedback. You guys are passionate about it. It comes across. It's pretty infectious. So, and then all you guys doing this work. I mean, I look at the audience in here, or the attendees right now. I know what you guys have been doing, and all the work. So, kudos to you. That it's needed. Like I can't. We can set up a program, but you got to do the work. That's how it is. We got a structure for you, and you got some great coaches, but you've got to do the work. Anyway, let's see whose turn is it. I think trading his life is your turn. Take us out.
I just want to just reiterate on what you just said. You got to do the work. And again, I know I keep mentioning this. Posting is not enough. You have to come to these academy coaching meeting so you can hear what the coaches have to say verbally and have your questions answered verbally and break down to you. So posting is only half of it. Coming to these meetings is the other half. So thank you for attending, and thank you guys. I think you guys are doing a great job, and that's it.
All right. Thank you, everyone. I will put these files into the Bookmap Academy chat. So PMAG, others, Taboho I don't have a file for, but you'll see. So your guys' trades or markups will be in there, so you can check them out as well. Okay. Thank you, everybody. Thank you for taking us out, trading his life, and we'll catch up next time.
Thank you. Good night.
Cheers, guys. Nice weekend. Take care. Bye-bye. Bye.